Friday, November 10th. A lot going on here. Um, so let's just take this out to our daily chart, looking at NASDAQ. Again, a whole lot going on today. We had a ginormous day. I didn't trade it. Um, Nonetheless, I had up here was like right here as my target. Boom. This is a busy. I had the SIBI on the daily. We want to take these highs out yesterday, the day before, but we didn't quite get there. We have this fair value gap here. This is a SIBI or BISI. The price comes down to respects yesterday. Look how it closed right at boom right there. And then we have this as a rejection block. None of these bodies closed above it. And if you take standard deviation of this wick here, it will equal the high of this here. So a lot of algorithmic uh, price action going on. And when we find these, this is an indication that you're looking at the chart correctly, and that the higher time frame objective is still in play. So as you can see here, one standard deviation of this wick equals boom, just a little bit above was where this wick from yesterday closed above, right? And then we have this SIBI down here. So it's like we have a rejection block. We rejected from this rejection block, and that means we need to retrace to a internal range liquidity or an internal range inefficiency or internal range inefficiency, which is this SIBI here or BISI here. Hold on. Right. And that's where the bias went to respected. And then we have a power three accumulation, manipulation, distribution, and I'll show you what that looks like on a lower time frame. So given that we have that as a higher time frame objective, and we came now to that daily BISI, rejected the daily rejection block twice, and we respected that daily BISI. This is where we closed yesterday at 4. This is the low, went up, boom, this is where we closed, right at the high of that SIBI low or BISI low on a daily. You may look over here, it's okay, we're respecting this fair value gap, that's fine. Opened up relatively equal. Here's our manipulation, or, well, yeah, you can see this as a manipulation, but really we get the accumulation first because we have a displacement. After displacement, we get accumulation or retracement. See this one, we have this huge displacement, boom, retracement. So here we have this huge displacement, you have retracement or displacement, you have accumulation. Then we get our manipulation like here in London session. That's why Lumi was saying that she wants to see what happens in London session because that's usually when we get our manipulation. London session usually represents the the low of the day or the high of the day. Asia represents like the accumulation. So accumulation Asia, manipulation in London, distribution in New York, and New York and London low or London close is like right around here, right where we get this SIBI filled in. So if we take our Fibonacci, take this low here up to the side here, this was our target, and this was on the daily chart. Boom, right there. I'm making this up, and I had this as an alert. Phone been booming, 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 booming. Look, I'm making this up. Where are my notifications at? Here. This is, see? Boom, not making this up. Had this here. This is circa 4 standard deviations. Boom. See? 5333. It's a little bit below 4 standard. Oh no, we're looking at the wrong thing. Here, get rid of this. Let's go back on to the 4 hour. See, right here, 53333, maybe 5 points above forward standard deviation of this. All right. So what do we know about the market maker sell and buy model? Well, and this is something I actually want to see. I want to see this here because we had our accumulation manipulate or our distribution, and we had our accumulation here, and down. So market maker buy model here, sideways sell model here, the low, buy model here, and on a lower time frame like the 15. Let's do it right here. If we take this manipulation leg, where is it at? Here in lunch. Where's four standard deviations? The low. What low? Asia low. Boom. Sum of 15. I'm not making this up. See? Four standard deviations. So that means what? It means that distribution is over. It means that the uh the the cell model reaches terminus. So that's we get another accumulation. And then we explode up. Right. Now it's interesting to know where this manipulation leg took place, which was in the New York lunch session. Not a macro specifically, but nonetheless. Uh, why is my macro showing on here? Yeah, macro here. Yeah, anyways, happened to the New York lunch session, which was the high of the day, which was what? The rejection block on the daily. See? See? This here? The high here was rejection block. See? 278 of this wick here was this high here. And now it's this high here. Boom. And then that's what we nosedive. All right. So that's what ICT was trying to show us in the video from yesterday. So after we uh, deliver from a daily rejection block, which is a PD array, then we go down and look for internal range liquidity, which is the BISI on the daily, and we want to see, are we going to inverse the BISI, are we going to inspect the BISI, bodies do the damage, wicks do the damage, body tells the stories. Body tells the stories, wicks, they do the damage. And then we see proof of the bodies telling the story here. Now, on our hourly chart, we are in a new market maker buy model. And so 1 to 1.5 standard deviation, even up to 2 at some times, especially on lower time frames, this is where we can expect a retracement, right? And how convenient is 1.5 here lining up with this BISI here, which I believe is in a premium. So if we do this, we can really go to that leg there, but let's just look at this really quickly. Fib. And we come right up here, optical trade entry for put, right? And the question is, since we fail to inverse this, where are we going to deliver down to? And in order for us to know where we're going to deliver down to, we need to know where our swing lows are. Where is our external range liquidity? Because we hit internal range here, externals here, and then down here. And do we have any more civvies? Right here, or BISIs right here. This is where we could go to. But given that we know that, hey, we are in a market maker buy model, this is why we joined Lumi. So what we appreciate on Lumi. Other traders don't understand this. Dash doesn't really go into these details, I believe. It's just another version of a sect that branched off of Christianity, just putting things in different words and just going at it differently and not explaining it um, in details that ICT explained it. This is all you need to know. The micro maker buy model sell model is all you need to know. And you can pick and choose your entry levels and what PD arrays you want to go off of and what model that you want to base your entries and exit off of. That's all he's doing. The rules that he's coming out with, oh well, we're gonna go to a this swing low that overlaps into a fair value gap. All right, that's internal range liquidity. Of course, we're gonna go there after we hit external range liquidity. That's part of how the algorithm works. That's not nothing. It's not your model, anyways. I'm rambling. So, delivered here 1.51. We're expecting a retracement. This also happens during when? New York AM session, which we get right here. Um, so that's convenient time and price. So what time is it? New York AM session. Bell opens. Usually we get a retracement, and then we have our alignment confluence with the manipulation leg of the hourly chart. So again, now if we want to know, are we going to inverse this? And we're respecting this. Are we going to inverse? Are we going to, reject this? Are we going to deliver from here on the 15? In order for us to know that, we need to actually on our. In order for us to know that, we need to go to a lower time frame, right? So just like how we are on a daily, like all right, we were respecting that busy on the daily. Are we going to deliver higher and take out that rejection block and go to that inefficiency, that external range of inefficiency? Well, we need to see what's going on the lower time frame. And then we got the market making buy model, and then we got the manipulation leg, and our projections up, yada yada yada. Okay, boom. Same thing happens on the lower time frame to the for the hourly, which is the 15. We have a BISI here. In order for price to continue to come down, we need this BISI to be inversed. Is this BISI inversed? No. And what else do we see in this BISI? What's interesting? A retracement leg. And retracement legs are what? They could be what? Fibbed. And do we see any confluences with the fib? Yeah, we're at -2. And what do we see? Another retracement. I said you can see retracements on the hourly from 1 and 1.5, maybe up to 2. But below, you can see retracements from 1, 1.5, 2, and even up to 2.5. You just need to find your confluences. And did we get that? Yeah. What's here? The BISI on a daily right here. It's really 555, 333, some shit like that. But nonetheless, see, it's here. Close enough. What do we get? Retracement. What is this? Second level of distribution or accumulation. Then where do we go to? Boom. What is this? -2.5. So you may be asking a question like, all right, so we're respecting this fair value gap, but how do I know that this 15-minute time frame is actually respecting this fair value gap and not going to be moving up any higher? Fair. Let's go to the 5. What do we get? Take this out here. Actually, we take this low here. It's a swing low. This out here. What do you see? We trace it down into what? Optical trade industry for what? A call. Deep discount. Lines up with what? Bullish order block. Yeah, we inverse this fair value gap here. But I get this Sadaji. So which one are we gonna respect? So we go down to a lower time frame up, stay on the higher time frame in this case, and rely on this fair value gap to be inversed. Can't rely on these two. So this was inversed, but we didn't continue down to the downside. So that's the first indication. Look at the bodies at where the opening of this bullish order block. Look at the wicks. Look at the bodies respecting this wick here. And this is the last 15 minute. This is the last 5-minute interval within this 15-minute time frame, as you can see here. And then we go over to another interval, new 15-minute interval. And mind you, on 15 minutes, it's going up and down for 15 minutes. But look at this body opened up or closed here. Runs up, comes down. Do the buyers respect this? Yes. Which is what? Line up with this bullish order block. Open or close? Open. Respected. Was this 5-minute inversed? No. And then what? Move up higher. Rejected. Or we deliver up higher. At what point are we going to know that this 15-minute candle, besides it being closed, is in fact going to be respected? It's a good question. We need to see an inefficiency. We get that right here. You see a swing high, get respected or rejected or taken out, which we get high. We're right here. What is this? Low, high, lower, low, bull shorter block. Runs up. Take out these highs here. Strong displacement. These are displacement candles. These aren't weak little nimble candles like this here. That's taking out these highs. We don't have an inverse of fair value gap here, unfortunately, that we can use to determine if we're going to go up higher. We do have this fair value gap here, which is what? Inversed. And then we will go up higher. I was like, all right, can we respect this? Yeah, we respected this here. Respect this here. By the time this gets inverse, where are we? In this candle here. And guess what? Boom. That gets inverse too on the 15. So let's go down to 1 minute. Look at this. This is what consumes a lot of energy. This, look at this. Up and down, up and down, up and down. I was like, oh shit, 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 oh shit. Let me show you something. If you were to get in from position from here down to here, this is 67 handles. Lumi got in the trade here. She took this 1 minute market structure shift. And on the 15 minute, it was a change instead of delivery. On the 5, it changed instead of delivery. The bearish order block up there, and she took that. Here we have this kiss right here. Boom, boom. I love that. This is balanced. No need to go back up there. Run up. Look where the body's closed at. Look at this here. This is a propulsion block. I see these often. These little two going up. Boom, boom, boom. This little small little retracement. Where's our manipulation leg here? So yes, you can see this as a market maker model here. Look, from this low to that high. -2. So we get our accumulation. -4 will be terminus, ideally. Then we get that, and then we come back down to -1, or the start of it. But that's not what I want to show you, really. What I want to show you is this. See, you can get caught up in this. There's a lot of fluctuations on a lower time frame, and you almost have to ride it out on a lower time frame because of the stop losses that these jag-offs they require you to have. That's why you trade a macro, and by trading a macro, you can catch this entire run up. I don't think you would breach that 2,500 trailing stop loss, but this is a long position to be in. I don't want to be in that type of position, so I just like trading the way I've been trading. But anyway, so here's our manipulation leg here. Boom. There's -4 down here. This lines up with this accumulation here. But anyways, here is where we can expect the first pullback, rejection, or retracement. -0.5. That's what we get right here. Goes up, comes back down here. -2. Almost -2.5 here. See that? The question is, how do we know that the 15-minute here is in fact going to be respected? I don't know. I haven't looked at these details, but from what I see, run up, down. It's just looks like a 30-second chart or 15-second chart, but I don't know. But this is something that I would be looking at and be like, this makes no sense. Where's our silver bullet? Where's our it just makes no sense. It's Here's our silver bullet right here. Boom, takes off. Where's our market maker? Where's our short-term market structure? Could be this high here. This is a lot of noise. That's why when you see this up and down bullshit, you have to come out to a higher time frame and ask what's going on. And then you get the feeling like, oh shit, I might miss a play if I'm not on the 1 minute. That's not true. Here's your play right here. I want to see this entire leg here on this 15, especially this right here. I want to see this get inversed. So this is where I'm putting my interest, especially my why does it do that? The fuck does it? Hold on One second, man. I don't know why it does that. Trading. I don't know why this applied all. This here, on lower time frame. Higher time frame prevails. We know that, and this is what we get. Want to see your body close over that on a higher time frame, not on a lower time frame, on a higher time frame. Would we get a lot of this madness? This looks so distorted. I'm glad we didn't trade this day. And I'm glad we came back and looked at this, understand that hey, there's a lot of distortion on a lower time frame. That takes up a lot of mental capital, takes up a lot of energy, and to the point where after we trade, we don't want to do anything. We just want to go to sleep or have sex or eat or go to gym. Here's our 10-50-50 macro. And this is why we respect the macro, especially on the lower time frame. Here it is right here. Here's our silver bullet. Look at 1050. This is our 1050 candle right here. We come down into this fair value gap, respects it, boom, takes out this high here, boom, we keep on going. Fail to take out the low. Now where we going? To this high here. Come down, boom. That's what we're looking at. On this 15-minute here, we came down and we came up. And look where we come down to here, to the low of this body. And then we take off. That's this candle wick right here. Right here. Right? Look how these bodies are lining up. Look how these bodies are just lining up. One, two, almost three. Look how they're just being respected. And I bet this is 50% here of this wick here. This is algorithmic. This is what we were discovering. Look how those bodies here, bodies here. Look how those bodies are all lining up. This is what we were looking at back in February on this monitor. This is algorithmic. Yeah, algorithmic. Look, these bodies respected right here. And so we see these things, we have to understand that, hey, this kiss right here. Boom. It's algorithm in action. Anyways, so that's today's price action. As we can see here, prices went on an absolute tear. Very good trading day, very good analysis. And until next time, be safe. I was lying, um, but overall, good job, man. Very good job. Very good week. Only traded 2 days this week. Yeah, 2 days this week. I'll show you the results really quickly. But things are beginning to start to sink in. So this was yesterday, or 2 days ago. This was yesterday. This was almost a week ago, on Thursday, a week ago. Look at this, how we just ran up $1,300. I think with one or two trades, maybe three. Net P&L 325. Came back the next day, got it back, plus more. So net difference is 700, and we're just $1,000 away from hitting this goal. So, uh, anyways, peace.